Hello students, and the topic which we are going to discuss today, that is IAS 33 earnings per share. It is one of the important ratios which is examiner expecting from you to calculate in your paper financial reporting. So let's start. What is the expected accomplishments of today's session? We will talk about the objective of this standard. Then we will talk about what is the scope of this standard. Then we will talk about important definitions. Then we will talk about some examples of potential ordinary shares. Then where to present EPS. Then we will talk about what does EPS says, then how to calculate basic EPS, then how to calculate diluted EPS. Uh, these are the two major areas which examiner is supposed to test during your exam. Either he will ask you to calculate basic EPS, either he will ask you to calculate diluted EPS. Now, keep in mind that there are different cases which we will discuss later on to calculate basic EPS and diluted EPS. Then we will talk about the importance of EPS, and finally we will talk about the limitations of EPS. And at the end of the session, as usual, we will discuss some exam questions, how to solve those questions. So let's start. What is the objective of this standard? The objective of IAS 33 is to specify the principles for presenting of EPS to improve comparison. Now, what is the objective of this standard is to describe principles for what? Presentation of EPS. What is the intent behind that presentation of EPS is to improve comparison for two things. Number one, over time of same entity, to compare the EPS of the same entity for different time periods. Let's assume this is 20x9. It will be compared with 20 y0. Then it will be compared with 20y1. Most of the cases in one financial statement, we are supposed to give the comparative figure. If we are preparing a financial statement for 20y1, in that case, comparative figure would be 20y0. If we are preparing the financial statement for 20y0, then 20x9 would be the comparative figure. So over the time of the same entity. And second case is to compare between different entities. Like this is entity A, its EPS with entity B, and B EPS with entity C, and so on. So the intent behind the objective of this standard is to describe the principles for presentation of EPS to improve the comparison of the performance of the same entity over the different time periods and between different entities. Okay. Now, what is the scope of IAS 33? IAS 33 applies to entities whose securities are publicly traded or that are in the process of issuing securities to the public. So all the public limited companies, public listed companies must have to apply IAS 33. Either they have already traded their shares on the stock exchange or other securities, or they are in the process of trading their securities to the public through stock exchange to the public. So both entities must have to apply to present their EPS, the law which they are supposed to follow, that is IAS 33. And any other entity who opted to present EPS must have to also comply with IAS 33. Okay. Now, this is very important note. If we have parent and if both parent and consolidated statements are presented in a single report, it means parent company financial statements are not separately presented, but they are presented in a single financial statement report. In that case, EPS only required for what? Consolidated financial statements. This is important. We will talk about later on when we will start the consolidation topic also. Okay. Now, important definitions. First of all, ordinary shares. An equity instrument that is subordinate to all other classes of equity instruments. So this is the last right against the asset which have, that is to the ordinary shareholder. So this is equity instrument which is subordinate to all other classes of equity instruments like preference shares, and it is also known common share or common stock. Then potential ordinary share, a financial instrument or other contract that may entitle its holder to ordinary shares in future. So any financial instrument or any contract that will give the right to the holder that he may be entitled for ordinary shares in the future, that is called potential ordinary shares. Then dilution. This is a reduction in EPS or increase in loss per share resulted from the assumption that convertible instruments are converted. Like if I have talked in my last session under financial instruments, what are convertible instruments? If those convertible instruments are converted, or options or warrants are exercised, or the ordinary shares are issued upon the satisfaction of specified conditions. It means if in the future convertible instruments will be converted into common ordinary shares, or options and warrants will be exercised, which will result in the issuance of further ordinary shares, or further ordinary shares will be issued upon satisfaction of certain conditions. Due to that exercise, if your EPS will decrease or loss per share will increase, then we will say that there is a dilution. Then there is an anti-dilution. If same conditions will be exercised, like financial instruments are converted, or options or warrants are exercised, or ordinary shares are issued upon the satisfaction of specified conditions, and due to that result, EPS is increased, earnings per share increased, or reduction in loss per share occurs, in that case we will say that there is an anti-dilution, no dilution. Okay. If conversion option will be exercised, options or warrants will be exercised, again I'm repeating, and due to that EPS will increase, then there is anti-dilution. If EPS will decrease, then there is a dilution. Got it? Now, examples of potential ordinary shares: convertible debt, potential preference, convertible preference shares. These both will be converted into ordinary shares. Share warrants, share options, share rights, employee stock purchase plans, and contractual right to purchase share. All these arrangements will give the right to the holder of these arrangements to get to buy potential new ordinary shares. So these are all the examples. But in our discussion, we will talk about convertible debts, convertible preference shares, share warrants, share options, and share rights. Where to present EPS? What standards is? What is the criteria? And entities whose securities are publicly traded, as I discussed earlier, that if it is a public listed company or that is in process of public issuance, will be in future public listed company, must have to present both basic and diluted EPS on the face of statement of comprehensive income. You can't present it in your notes to the accounts. Must have to present on the face of your statement of comprehensive income. Any company which is public listed company or which is in the process to become a public listed company must have to present both basic and diluted EPS on the face of their statement of comprehensive income. Clear? It must be presented in such a way, basic and diluted both EPS, that they have equal prominence for all periods presented. As I discussed earlier, usually what happened that you have comparative figures in your financial statement of a preceding year. So in that case, all the periods those you have presented in your financial statements, your EPS must have an equal provenance for both periods, current period as well as comparative period. If there is a negative EPS, it means loss per share you must have to present your basic and diluted EPS. Even though you have loss per share, you must have to present both. So the conclusion is EPS will be presented where? At the face of statement of comprehensive income with equal prominence, whether you have loss, whether you have profit. Okay. Now, what does EPS says? It says that how much profit or losses company earns for each ordinary share. So this is the parameter, this is the measurement performance of profit or loss per share, as it is indicated from its name, earnings per share. Okay. So you have two things. One is basic EPS. What is the fundamental coverage in basic EPS? You will cover net profit or loss for the period, attributable to whom? Ordinary shareholders, and number of ordinary shares. So these are the things which are the source data to calculate your EPS, net profit and loss for a period, attributable to ordinary shareholders, and number of ordinary shares. Then for diluted EPS, you have adjusted net profit and loss. What is adjusted net profit and loss attributable to the ordinary shareholders and adjusted number of ordinary shares? How these will be adjusted, we'll talk about later on when we will discuss in detail about diluted EPS. Okay. For what it will be adjusted? Ordinary shares. Effect of all diluted potential ordinary shares. Anti-diluted will not be considered. We'll talk about later. So it means there is one conclusion from this whole discussion, dilution, anti-dilution, that diluted EPS will always be lower than basic EPS for the same time period. If you are calculating EPS for 20x9, basic EPS will always be greater than diluted EPS. Okay. Then how to calculate basic EPS? What is the formula? Basic EPS is equal to profit attributable to ordinary shareholders divided by weighted average number of ordinary shares. So here we have two major things which we will discuss under different criteria, that what is profit attributable to ordinary shareholders and how we will calculate weighted average number of ordinary shares. Whereas profit attributable to ordinary shareholders is calculated group profit after tax less NCI, this is for consolidated financial statements, less preference dividend. Now, if it is for a single entity, in that means profit after tax less preference dividend is equal to profit after tax. Then there is no NCI, less preference dividend is equal to profit attributable to, the net result would be profit attributable to ordinary shareholders for single company. For group profit after tax less NCI, non-controlling interest, less preference dividend. We'll talk about non-controlling interest once we will talk about consolidated financial statements. How to calculate basic EPS case 1. The first case is issuance of shares at full market price. In that case, how we will calculate basic EPS? Formula is same. Profit attributable to ordinary shareholders divided by weighted average number of ordinary shares. Now, there is a possibility that you may have issued shares during the time period. Like at 1st January 20x9, you have some shares, and then there is a possibility that you may have issued shares at 1st April or 1st November or 1st October or 1st September or any date during the time period. In that case, to calculate weighted average number of shares, what we will do, we will use time fraction. What we will do, we will use time fraction. To calculate weighted average number of ordinary shares, what we will do, we will do time fraction. When we have full market price, issuance of shares at full market price, there is no concession. We will talk about those cases later on. Okay, this is an example. An entity with the year ended of 31st December 20x8 issued 200,000 shares at full market price of $3 on 1st July 20x8. Now this is during the year. Your year is going to end at 31st December 20x8. 1st July 20x8 you have issued at full market price of 200,000 shares. So relevant information, data for 20x7 for comparative figures, for 20x8, profit attributable to ordinary shareholders, number of ordinary shares in issue at 31st December last date, 800 you have for preceding year, and during this year you have issued 200,000 shares. Okay, calculate the EPS for each of the years. First of all, this is 20x7 for previous year. In previous year, you don't have issued any new shares. So your profit attributable to ordinary shareholder is given to you, which is 460,000. That is numerator. Then your denominator is number of ordinary shares at the end of that accounting period, which is 20x7, 800,000. So 800,000, and your EPS. Keep in mind, I have calculated EPS in dollars, but in most of the cases in your exams, it will be in cents. So if it is in cents, it is 57.5 cents per share. But if it is in dollar, then $0.575 per share. Now, to calculate 2008 EPS, we have profit attributable to ordinary shares holders, which is 550,000. Then our denominator, because we have issued some shares at full market price during the accounting period, which is working calculation of weighted average number of shares. So shares held from 1st of January 20x8 to 30th January June 20x8, 800,000 times time fraction, which I have talked earlier. 6 by 12 is equal to 400,000. Now it is increased. You have issued 200 more shares. So here held from 1st July 20x8 to 31st December 20x8. How much? 1 million. This is, sorry, typo error, which is 1 million. 800 preceding, 200 new shares. So 1 million times 6 by 12 is equal to 500,000. And in total, you have how much weighted average? 900,000. And this 900,000 will be your denominator. Okay. Now you have calculated EPS, which is 0.611 per share or 61.1 cents per share. It means even though you have issued new shares, your performance in the form of EPS is better than 20x7. Okay, got it? Again, I'm repeating, if you have issued shares at full market price, in that case, you will use time fraction to calculate your weighted average number of shares. Then how to calculate basic EPS case 2, which is bonus issuance. Now keep in mind, most of the companies' laws in different countries have this clause that once company is issuing shares subsequently, it must have to offer to their existing shareholders to purchase the shares. Why? To maintain their voting rights. Okay, so for that case, companies have two possibilities: either bonus issuance, either right issuance. So first of all, I'm going to discuss bonus issuance. If it is bonus issuance, in that case, EPS calculation formula is same: profit attributable to ordinary shareholders divided by weighted average number of ordinary shares. Then what are the characteristics of bonus issuance? Does not provide additional resources to the issuer. There is no cash remittance to the company. No additional resource for the company. Shareholders owns the same proportion of the business as I discussed earlier to maintain their voting rights. Okay. So there is no cash involved before and after the issuance. Impacts on EPS. What will be the impacts? In the current year, bonus shares are deemed to have been issued at the start of the year. So there is an assumption, irrespective of at which date you have issued, you will assume that these are issued at the start of the year. Comparative figures are restated, preceding period figures are restated to allow for the potential increase in share capital caused by the bonus issue. So previous year EPS you are supposed to be restate. Doing this, treat the bonus issues as if it had always been in existence. Again, this is the case where we will assume that bonus shares were issued at the start of the preceding period. Okay. Now keep in mind, this concept will apply when bonus during the accounting period you have only bonus issuance. But if there is a market issuance, then we will talk later on how to deal with that in one another example. Here we are assuming that during the accounting period you have only bonus issuance for that purpose, but you will assume that your bonus shares are issued at the start of the accounting period, and for to restate the preceding time period, you will assume that these shares were already issued at that these were already in existence. Okay. Then this is very important concept: how to calculate bonus fraction, number of shares before bonus issuance and number of shares after bonus issuance. This is called what? Bonus fraction. How to calculate basic EPS, case 2, bonus issuance. An entity makes a bonus issuance of one new share for every 5 existing shares held on 1st January 20x8. Profit attributable to ordinary shareholders for the year is 550, 460. Number of ordinary shares, 1 million in 2007 and 1.2 million in 2008. Calculate the EPS. Now, the issuance, bonus issuance is one new share for every 5 existing shares. One new share for every 5 existing shares. Look, bonus issuance is one new share for every 5 existing shares. It means existing shares were at 1st July 1 million. So 1 million divided by 5 times 1. So how many bonus shares issued? 200,000. So 1 million divided by 5 times 1, 200,000. So as it is indicated here, in 2008 shares are increased with that 200,000. It means there is only bonus issues, no other issues during the accounting period. So for 20x7 basic EPS, for 60,000 profit, then we assume that shares issued at the start of the preceding time period divided by 12 million, 1.2 million, sorry, EPS is 0.383 per share dollar. For 2008, 550 divided by 12 million, 0.458 per share. Now look, we can do this with another way. Let's assume calculate EPS of 2007 normal EPS, which is 460,000 divided by number of shares 1 million, okay, is equal to 0.460. Okay. Now, what is bonus fraction? That is 5 by 6. Okay. Now, 0.460 divided by 6 times 5 equals to 0.383. Here, because we have data of 2007, then we calculated straight away. If we don't have data of 2007, but we have EPS of 2007 for preceding year, for comparative purpose, we will restate it by multiplying it with the bonus fraction. What is bonus fraction? As I discussed earlier in previous slide, that is number of shares before bonus issuance divided by number of shares after bonus issuance. So either you can do 1 million divided by 12 million, or which is 5 by 6. Okay. In this way, we can restate our preceding period EPS. Then third case, which is right issuance. As I discussed earlier, formula is same: profit attributable to ordinary shareholders divided by weighted average number of ordinary shares. Again, characteristics. There is a contribution of additional resources. So what is right issuance is also done to existing shareholders, but right issuance is done at price lower than the market price. Okay. So there is a additional resources contribution. Issuer will get the cash. Additional resources will be received by the issuer. They are normally priced below the full market price, as I discussed earlier. Then they have both elements of bonus and full market price issuance. So it have both elements, but bonus against which no additional resources, and full market price against which we have additional resources. Okay. So important formulas. Here, the most important formula is to calculate TERP, theoretical X right price. This is market price of shares required for one right plus issuance price of one right here divided by shares required for one right and right here. This is the formula, most easiest formula to calculate TERP. Then how to calculate bonus fraction? Bonus fraction is market price before right issuance. It is also called come right price divided by TERP, which we have calculated by using this formula. Then there is inverse bonus fraction. Then there is another formula which is called inverse bonus fraction. It is inverse of this formula. It is TERP divided by come right price. Now keep in mind that under bonus fraction, come right price will always be higher than TERP. So higher figure would be numerator and lower figure would be denominator. Under inverse bonus fraction, lower figure would be numerator and higher figure would be denominator. Okay. How to calculate basic EPS? Number one, steps to solve the question of case 3, right issues. Step 1, calculate TERP. Step 2, calculate bonus fraction. Step 3, calculate weighted average number of shares using this format. Number of shares before right issuance will be multiplied with bonus fraction, then will be multiplied with time fraction. Then number of shares after right issuance will only be multiplied with time fraction, and the sum would be weighted average number of shares. Okay. Then in step 4, calculate basic EPS, and in step 5, restate the basic EPS of preceding year. How? Basic EPS of preceding year times inverse bonus fraction, which I have talked earlier, which is TERP divided by come right price. Okay. So these are the 5 steps to calculate the basic EPS for current year and for preceding year when we have right issuance. Okay. Now this is the question. An entity issued 1 new share for every 2 existing shares. So ratio is 1 new share for every 2 existing shares held by way of right issuance at $1.5 per share. Pre-issue market price, this is called come right price, which is $3. Pre-issue market price, come right price, market price before right issuance, same thing. As I discussed earlier, that there is an element of resources, but right issuance will always be done at a price lower than market price. Here it is evident that it is issued at 1.5 and market price before issuance of right share was 3. Relevant information: profit attributable to ordinary shareholders and number of ordinary shares in issue. Now, this is the figure for preceding year. For current year, we have 1.2 million. Now, for 800,000, right issuance is for 800,000 times 1 by 2 is equal to 400,000. And this is evident that once we added this 400,000, we have in 2008 1.2 million shares. It means there is only right issuance in year 2008, no other issuance of shares required. Calculate the EPS for each of the year. Now, first of all, calculate TERP, which is equal to 3 market price before right shares times number of rights required, number of shares required for 1 right, which is 2. 3 times 2 plus right 1 times issuance price of 1 right share, which is 1.5, divided by 2 plus 1, and which is equal to 2.5. We have calculated TERP. And it is indicated that TERP will always be lower than the come right price, which is 2.5, lower than $3. Now, step 2, calculate bonus fraction, which is 3 by 2.5. Come right price divided by TERP. Step 3, weighted average number of shares. Now, at which date we issued shares? 1st July 2008. So 800,000 times bonus fraction 3 by 2, this one, times time fraction, January, February, March, April, May, June, 6 by 12, which is 480. Now, shares after right issuance, 1.2 million times only your time fraction, July, August, September, October, November, December, 6 by 12, 600,000. And weighted average number is 1.080000. Now, look, for 2008, 550,000 profit attributable to ordinary shareholders divided by weighted average number of shares 1.08 million. Now step 4, basic EPS 550,000 divided by 1.080 preceding year EPS, current year EPS, which is $0.509. Now for preceding year, basic EPS preceding year 460 divided by shares of that year outstanding 800,000, which is 0.575 per share. Now how to restate EPS preceding year? 0.575 times inverse bonus fraction, which is opposite to that, divided by come right price, and which is 0.479 per share. Now, rule of thumb is bonus fraction numerator is higher, denominator is lower. Inverse bonus fraction numerator is lower, denominator is higher, because when we are restating EPS of preceding year, it would be lower than the actual EPS of that preceding time period. So these were the 3 cases which examiner can test to calculate basic EPS with full market issuance, bonus issuance, or right issuance. Then how to calculate diluted EPS? Formula is profit attributable to ordinary shareholders plus notional extra profit divided by weighted average number of ordinary shares plus notional extra shares. Profit attributable to ordinary shareholders, we know how to calculate. Now question is, what is notional extra profit and what is notional extra shares? No, first of all, I'm talking about notional extra shares. If that option will be exercised to convert the instrument into ordinary shareholders, to exercise options or warrants, what would be the extra number of shares? That is notional extra shares. And what would be the extra profit by converting those instruments into shares? Because there would be a saving of finance cost or preference dividend cost. Okay. So in that case, those we will add. Keep in mind how to calculate diluted EPS in case 1, convertible instruments. Now convertible, it could be convertible loan notes, it could be convertible preference shares. Here I am talking with the example of convertible debts, means loan notes. What are the characteristics? Interest or dividends would be saved, as I discussed earlier, by converting those instruments into ordinary shares. Either preference dividend or interest will be saved. There is an additional earning, which you have additional profit by saving in your expense, that is subject to the tax. Okay, it means what the profit you will use, notional additional profit, that is subject to tax. After deducting the tax, that would be your profit. Then number of shares would be increased. Number of ordinary shares would be increased. Steps to solve the question. First one, calculate basic EPS in normal case. Step 2, calculate, check is there dilution or anti-dilution. In most of the cases in your exams, if there is about convertible instruments, that would be the assumption that there is a dilution. What is the impact of dilution as discussed earlier? that your diluted EPS would be lower than your basic EPS. And thirdly, calculate diluted EPS if you have dilution. Now, how to calculate diluted EPS case 1 convertible instruments? Question: on 1st April 20X1, an entity issued a convertible loan notes of 1.25 million. The loan notes carries an effective interest rate of 8%. Each $100 nominal of the loan stock will be convertible in from 20x6 to 20x9 into the number of ordinary shares set out below. Now these are the information. If it is converted on 31st December 20x4, 124 ordinary shares will be issued for every $100. If will be converted at 31st December 20x7, 120 shares would be. If converted at 2008, 115 shares would be. If converted at 2009, 110 shares would be. Now, when you have different options, when there is an earlier conversion, there would be more number of shares. And even though it will depend upon the question data, you will opt the option which will give the maximum number of shares. So we will opt the option that these will be converted at 31st December 20x6. So we will go with the option what? 124 shares. Highest, any option which will give the highest number of shares, we will opt that option. Up to 2006, maximum number of shares issuable after the end of the financial year will be at the rate of 124 per share for $100 on 1250 million debt. Okay, so the same thing is, even if they are supposed to convert before to 20x6, it would be 124 shares for every $100. Other relevant information: issued share capital for $500,000 in 10% cumulative irredeemable preference shares of $1. 1 million in ordinary shares of 25 cents. It means 4 million ordinary shares. The tax rate of tax is 30%. Trading results for the year ended 31st December are as follow for 20x2, 20x1. PBIT this, interest on 8% convertible loan notes this, then we have profit before tax, then income taxes, and then profit after tax. Okay, now look, step 1, calculate basic EPS. Very simple. Now look at the data. 700,000 profit after tax. PAT, we will subtract from there dividend on preference shares to calculate profit attributable to ordinary shares. Now preference shares are how much? 500,000 times 10%. Okay, so 50,000 is preference dividend, which we have subtracted here. So for year 2002, 700,000 minus 50,000, which is your PD, preference dividend, divided by weighted average number of shares, which is 4 million. So 0.163 per share. Now for preceding year, what is our profit? 641,773 minus again preference dividend, which is 50,000 divided by 4 million shares, and it is $0.148 per share. Now step 2, dilution or anti-dilution for year 1. Now how much finance cost will be saved? Look at data. Look, we have 1.25 1.25 million. So 1.25 million times 8%. 1.25 million times 0.08, it is 100,000. So your finance cost is 100,000, which is 1250000 times 8%. Now this is 100,000. It is subject to tax. Now this is your saving, your additional profit, and subject to saving minus tax rate is 30%, which is tax at 30% equal to 30,000 subtracted, and then we have 70%, which we can calculate 100,000 times 1 minus t, which is 0.3. So 100,000 times 0.7 equal to 70,000. In this way we can calculate. Okay. Now that is your notional profit numerator divided by notional number of shares. We know 1.25 million we have dollars, divided by 100 times 125, because for every $100 we are supposed to issue 125 shares. So sorry, we'll have to check 124, sorry, not 25. So denominator is 125 tetra 0 divided by 100 times 125 equals to, oh sorry, 125,000 divided by 100 times 124, 1550. So this is calculated how $125,000 tetra 0 times 124 divided by 100. We calculated. Now, what is the result? Our EPS is 0.045 for current year. If this EPS is less than your basic EPS, then there is dilution. So this is 0.045, this is 0.163, this is less. So there is dilution. It means we are supposed to calculate the diluted EPS. Again for preceding year, same. Now 75,000 was the profit, and look, the important thing is when shares were issued, loan was issued. Loan was issued at 1st April 20x1. For that time period, to calculate finance cost, we are supposed to make it time fraction. So 1250000 times 8% times 9 by 12 from 1st April to 31st December. So 100,000 times 9 by 12 is equal to 75,000, which is subject to now your saving tax, which is at 30%. So 75,000 times 0.3 equals to 22,500, which we subtracted, and then 75 minus 22.5 52,500 is your net saving. So for preceding year, it is 52,500 divided by 1162,500. Again, this is with your time fraction. Okay. Now you calculated the diluted EPS, which is 0.045. That is less than this. So there is a dilution in preceding year also. Now to calculate diluted EPS, what we do, this, the result of this, which is how, sorry, 650,000, and result of this, your notional profit. Profit attributable to ordinary shareholder 650,000, then your notional profit divided by uh, your weighted average number of shares, which is preceding 4 million, and now this 1.55 million. So 5550 million, and your diluted EPS is this. Now this is less than this. So this is concluded that your diluted EPS will always be less than your basic EPS for preceding year. Again, result of this, which is 591,770 plus result of this, and divided by these 4 million plus these 5,162,500, and your diluted EPS is $0.125 per share. So in this way, we will calculate convertible instruments diluted EPS. Now there is another case when we have options or warrants. In that case, what are the characteristics of option and warrants? Option and warrants gives the holder the right to buy a share at some time in future at predetermined price. Cash is received by the entity at the time the option is exercised. When cash will be there is a resource inflow, and DPS calculation must allow for this. There is a bonus element in shares. Total number of shares increase with that portion, and EPS will always be diluted. Here we don't need, because there is the element of bonus, there is always a dilution. There is no possibility for anti-dilution. So always would be dilution. Okay, because there is an element, because that predetermined price will be lower than, why there is a bonus element, because predetermined price will be lower than market price. Okay, then what are the steps to solve the question? Step 1, calculate the basic EPS. Step 2, calculate bonus element of shares by using this formula, which is number of options times fair value per share minus exercise price per share divided by fair value. And in step 3, calculate diluted EPS. We will calculate the diluted EPS. Okay. Now, look at this question. On 1st January 20X7, a company had 4 million ordinary shares in issue and issues option for a further million share. The profit for the year is $500,000 during the year to 31st December 2007. The average fair value of one ordinary share was 3. Now, how much option is? Issue option for further 1 million shares. Okay. And the option is at $2. Exercise price is 2. So exercise price is lower than the fair value. It means there is an element of bonus. Calculate basic EPS and DPS for the year ended 31st December 20X7. Step 1, basic EPS. Profit attributable to ordinary shareholders are given to us 500,000, and weighted average number of ordinary shares are also given to us divided by 4 million, which is 0.125 per share. Step 2, number of bonus shares, bonus element, 1 million shares, value of option times fair value, which is 3, minus exercise price, which is 2, divided by fair value 3. So its bonus element is 3333. So this bonus element will be added in your weighted average number of shares to calculate diluted EPS. Diluted EPS is 500,000. Your profit attributable to ordinary shareholders does not change, divided by 4.33333 million, because this figure we have added in what weighted average number of shares we have already. So your diluted EPS is $0.115, which is lower than your basic EPS. Again, it is concluded that your diluted EPS will always be lower than your basic EPS. Okay. Then what is the importance of EPS? EPS is, basic EPS is used to calculate PE ratio, price earning ratio, which is one of the major stock market indicator of performance. Price earning ratio, which is calculated market value per share divided by EPS. So the major importance for EPS is it is used to calculate your PE ratio. Then diluted EPS. It shows what the current year EPS would be if all the diluted potential ordinary shares in issue have been converted. So what would be the impacts on your EPS if conversion will be exercised? It can be used to assess trends in past performance, because you are calculating the comparative figures. So it can be used to assess the past performance trends. So in theory, it serves as a warning to equity shareholders that the return on their investment may fall in future periods. Why? Because potential number of shares will go up and your EPS will go down. What are the limitations of EPS overall? When we have rising prices, EPS will increase as profit increase, yes. Thus, any improvement in EPS should be viewed in the context of effect of price level changes on the company's profits, as apparent growth in earnings may not be real. So the increase in your EPS is due to the increase in inflation. It's not in the real performance improvement. This is the first drawback. Then EPS is dependent on earnings figures, which is subject to many areas of judgment. So if your earnings are not accurate, there is a possibility that your EPS will not be accurate. And earning figures should never be used as a single case. So this is not a single performance indicator to measure the performance of the organization. Key performance measure. This is to take far too simplistic an approach to performance analysis. This is the most simplistic approach for performance analysis. EPS cannot be used as a basis for comparison between companies, as the number of shares in issue of any particular company is not related to the amount of capital employed. So it does not take the volume of different companies. It is taking only the number of shares. For instance, if one company have par value of say $1,000, it means its number of shares may be less, and other company which in total volume of issued capital is higher, but its number of shares are too much because its par value is lower. So it's not taking into account the volume of the equity. An entity earnings are affected by the choice of its accounting policies, as I discussed earlier, that your earnings will be different by having different accounting policies, and it may have different impacts on your EPS. It is a historical figure. Yes, performance, past performance we are using. It may not be helpful to find out what is your predictive value. Diluted EPS is only an additional measure of past performance despite looking at future potential shares. So actually, by issuing new shares in the future may bring more resources in the organization, but here we are applying that on a previous earnings to calculate our diluted EPS. So these were the criticisms on EPS. Now let's talk about some past exam questions. Garfish has profits after tax of $3 million in the year ended 31st December 2007. On 1st January 2007, Garfish had 2.4 million ordinary shares in issue. 2.4 million ordinary shares in issue. On 1st April 2007, Garfish made a 1-for-2 right issues. Now this is right issues question at a price of $1.4 when the market price of Garfish shares was 2. Now, what is the basic EPS for the year ended 31st December 2007 according to EPS? First of all, what we will do, we will calculate TERP. Step 1, TERP. Okay. How many shares required to get 2 right shares? 2 shares for 1 right. So 2 times market price is 2 plus 1 right times issues price is equal to 1.4 divided by 2 plus 1. Shares required for 1 right plus 1 right. So 2 plus 2, 4, 2 times 2, 4 plus 1.4, 5.4 divided by 3 is equal to 1.8. Now, what is our bonus fraction? So bonus fraction is 1.8 divided by 2 issues price before to that second section. Third, step 3, weighted average number of shares. Now, $3 million, that is profit attributable. 2.4 million ordinary shares we have at 1st January 20x7 and when issued 1st April 20x7. So 2.4 times bonus fraction, which is 1.8 divided by 2 times time fraction, which is till 1st April, January, February, March, 3 divided by 12 is equal to 2.4 times 1.8 divided by 2 divided by 4. 2.4 million times 1.8 divided by 2 times 3 divided by 4 is equal to again I have to calculate it. 2.4 million times 1.8 divided by 2 times 3 divided by 4 is equal to 1.620,000 in millions. Now, how much bonus is right issuance is 1 for 2, so 2.4 plus 1.2, it is in total 3.6. Now 3.6 times time fraction, which is 9 by 12. So 3.6 million times 9 divided by 12 is equal to 2.700000. Now plus 1.6200000 is equal to 4320000. This is weighted average number of shares. Now EPS. Profit attributable to ordinary shareholders 3 million divided by 4.320 million. So 3 million divided by answer is equal to 69.4 cents. So your EPS is 69.4 cents. Okay. Now, in next question. On 1st January 2024, SAM company had 3 million ordinary shares in issue. On 1st June 2024, SAM company made a 1-for-3 bonus issue. On 30th September 2024, SAM company issue a further 1 million share at a full market price. SAM company had profit attributable to ordinary shareholders of $2 million for year ended 31st December 2024. Now, this is the question which have bonus issuance as well as full price issuance. So in that question, we are supposed to calculate weighted average number of shares, which is the major calculation, till bonus issuance, which is at 1st June 20x4. The already number of shares which we have 3 million times bonus fraction, which is 3 by 4. Number of shares before bonus issuance divided by number of shares after bonus issuance. So it is 1 million. So once we will calculate 3 by 4, 3 million divided by 4 million, it is 3 by 4, which you can do simply. Number of shares required for one new bonus, 3, that would be numerator, divided by denominator would be one bonus additional, times time fraction, which is till 1st June, how many? 5 by 12, 1st January to 1st June. So it is 3 million times 3 by 4 times 5 by 12 equals to 937,500. Now from that date to next full market issuance, we have 4 million shares, 1 million bonus, 3 million preceding, times when next issuance is, that is at 30th September. So from June, July, August, September, 4 months, times 4 by 12. So 4 million times 4 by 12 is equal to 1,333,333 million. Last one. Now we should how much? 1 million at full market price. So in total 5 million, 4 million preceding, 1 million times time fraction. So 30th September onward, October, November, December, 3 months, 3 by 12. So 3 plus 4, 7 plus 5 in 12, total complete. So 5 million divided by 4 is equal to 1.25 million. Now we will make the total 1.25 million plus 13333 plus 937 500 937 500 in total it is 3520,833 3520,833. Now 2 million your profit attributable to ordinary shareholders divided by weighted average number of shares. So 2 million divided by 3520,833 is equal to 0.568. So option C is the right answer. 3520,833. This is why when happened when you have in the same accounting period bonus issuance as well as full price issuance. But if you have bonus issuance only, then you will assume that it has happened at the start of the year, no time fraction. Okay. Now, next exam question. During the year, Mac made a 1 for 3 right issuance. This is again for right issuance at issuance price of 1.6 when your market value is 2.2. Last year EPS was 81 cents. There were no other issuance of shares during the year. What is the restated EPS? Now, first of all, we will calculate what? TERP. Then we will calculate inverse bonus, inverse bonus fraction. TERP is 2.20 times 3 rights shares required for one right, 3 shares required for one right, plus issuance price of right times 1 divided by 3 plus 1. So it is 3 times 2.2 equals to 6.6 plus 1.6, 8.2 divided by 4, which is equal to 2.05. Now, restated EPS. Previous period EPS 81 cents times. Now, TERP is a numerator, lower amount is a numerator, and higher amount is 2.20 times 81 divided by 2.20 is equal to 75.48 cents. So 75.48 cents is a restated EPS of preceding period. Now, Coral Company has net profit for the year ended 30th September 2025 for 10.5 million. Coral has had 6 million shares in issue for many years. On 1st October 2024, Coral issued a convertible bond. It has an initial liability element of 2.5 million and the market interest rate for non-convertible instrument is 8%. The bond is convertible in 5 years' time with 50 shares issue for every $100 nominal of convertible bond held. Coral paid tax at a rate of 28%. What is the diluted EPS? It means you have EPS. So in that case, your profit attributable to ordinary shareholder is 10.5 million plus notional profit. To calculate notional profit, we will calculate how much convertible bonds value is, which is 2.5 million. So 2 point which is 2.5 million times 0.08. This is your finance cost, which would be your saving. But now you are supposed to pay tax. Your tax rate is 28%. So your remaining figure is 28 is tax. It means 72% times 0.72, which is equal to 144. So this is 144,000. Your notional profit, which we have calculated, 2.5 million times 8% times 72%, which is 100 minus tax rate. Okay, so this is your notional profit divided by your already shares in issuance is 6 million plus your notional shares, 50 shares for every 100 nominal dollar. So 2.5 million divided by 100 times 50, which is equal to 1.25 million. Now, your numerator is 10.5 million plus 0.144 million is equal to 10.644 million divided by 7.250000. Now, divided by 7250 is equal to 146.8 cents. 146.8 cents. We don't require to check for anti there is dilution or anti-dilution because examiner is asking us to calculate direct diluted EPS. It means there is a dilution. Okay. Now, in next question, ISCO's financial statement shows a profit for the year to 31st December 20x5 of $2 million. On 1st January 20x5, ISCO had 4 million shares in issue and made no further issue of shares during the year. At 31st December 20x5, there were 1 million outstanding options to buy share at $3 each for the year to 31st December 20. The average market value of ISCO share was 5. So it means this is option case. Diluted EPS we are supposed to calculate. Now look, profit attributable to ordinary shareholder is how much? $2 million. How much options we have? 1 million outstanding options to buy shares at $3. Issuance price is $3 and market price is $5. So bonus element 1 million times basic EPS not required times 5 minus 3 divided by 5 is equal to 2 by 5. It means 40%. So 400,000 is a bonus element. So our profit attributable to ordinary shareholders is 2 million divided by already number of shares in issuance what how much? 4 million plus 400,000 bonus element. So your EPS, diluted EPS is 2 million divided by 4.4 million. 45.45 cents. So your answer is 45.5 cents, which is option C. Then, which two of the following do not need to be removed from an entity's net profit in statement of profit and loss? This is the important word, net profit in statement of profit and loss, in order to calculate the earnings figure to be used in the earnings per share calculation. Redeemable preference share dividend. Now this here word is redeemable preference share. Redeemable means that will be considered as debt as per our discussion under financial instruments. When it is debt, its dividend will be treated as finance cost. So the net profit figure which we have calculated, that already have deducted that redeemable preference share dividend. So calculate the earnings figure to be used in EPS calculation. This will not be considered because it is already deducted. So this is the first, because net profit which we have, that have already deducted this redeemable preference shares. Then irredeemable preference share dividend, yes, we are supposed to deduct it. Then profit attributable to NCI, yes, we are supposed to deduct it. Any error in expense discovered after the financial statement have been authorized for the issue, yes, as far as the rectification in errors, it is supposed to be deduct. Then ordinary dividend, no, we will never deduct the ordinary dividend. So our answer is option A and E. Okay. Then Aqua has correctly calculated its basic EPS for the current year. Allocate the items to the appropriate category. Included within diluted EPS, included within basic EPS. Which one? A 1 for 5 right issues of equity shares during the year at 1.2 when the market price of this will be used where? Here in calculation of basic EPS. Then the issue during the year of loan note convertible into ordinary. This is convertible. It would be here in diluted EPS we will consider. Granting of directors share options exercisable in 3 years time in options in diluted shares. Diluted EPS. Equity shares issued during the year as a purchase consideration for the acquisition of new subsidiary, new shares issuance at full market price included in basic EPS calculation. So this is the criteria. Then many commentators believe that the trend of earnings per share is more reliable indicator for underlying performance than the trends of net profit for the year. Which of the following statements support this view? Net profit can be manipulated by choice of accounting policies, but EPS cannot be. No. EPS takes into account the additional resource made available to earn profit when new shares are issued for cash, whereas net profit does not. The disclosure of the diluted EPS figure is a forecast for the trends of the future period for the future time. The comparative EPS is restated where a change in the accounting policy affect the previous year. So our answer is 2. EPS takes into account the additional resources made available to earn profit when new shares are issued for cash, whereas net profit does not. Because when we are calculating the weighted average number of shares, we will include the new shares. So EPS includes, but net profit does not include. Our option right answer is B. Then on 1st October 20x3, Hoy had $2.5 million of equity shares of 50 cents each in issue. No new shares were issued during the year ended 30th September 24, but on that date, there were outstanding share options to purchase 2 million equity shares at $1.2 each. The average market value of Hoy's equity shares during the year was $3 per share. Highest profit after tax for the year ended 30th September 2024 was 1.5 million, 55 million. Highest, what is highest diluted EPS? Again, we don't need to calculate dilution or anti-dilution. So what is, how many? 2 million, dollar 2.5 million of equity shares of 50 cents. Here, what is required to calculate number of shares, which is value is 2.5 and every share is for 50 cent. It means total number of shares in issuance is 5 million, double to dollar to 2.5 million, because for $1 we have 2 shares. No new shares were issued during the year, but on that date there were outstanding share options to purchase how many? 2 million equity shares at 1.2 each. So market value is this. So we will calculate bonus element, number of bonus shares. So 2 million times fair value, which is 3, minus issuance price, which is 1.2 divided by 3. So 2 million times 1.8, 1.8 divided by 3 equals to 1.2 million. Bonus element is 1.2 million. Already shares in issue is 5 million. So diluted EPS is profit attributable to ordinary share is 1.55 million. 1.55 million divided by 5 million plus 1.2 million. So 6.2 million in total. So 1.55 million divided by 6.2 million is equal to 0.25. It means in cents, 25 cents. Option A is the right answer. Thank you very much guys for your time. I hope you may have enjoyed this lecture. So in next session, we will talk about company final accounts, which is the structured question. Okay.